Bitcoin just closed its worst week since November 2022, down 14%, around $1.5 billion in liquidations, and 85% of those were longs. Market and Bitcoin dropping together like a stone. This isn't panic, it's a cascade. And today I'm going to show you how it read in advance across every time frame. Quick reminder for new viewers, I work on BIOS time. The week closes Wednesday, because that's where the scheduled Fed decisions, the end of the blackout window, and the peak of Tuesday to Thursday institutional flow all line up. Wednesday's the climax, Thursday's the reaction, Friday's when you take stock. On a crash week, that matters even more. The public calendar says one thing: real money moves to its own rhythm. On to the market, one story on every time frame: cascade down. On the weekly chart, structure keeps breaking direction down. Trend dominance is trying to push below 10%, which means we're settling onto the floor and spending some time here. 5-day chart, same thing, structure broken, dropping hard, trend dominance also pushing below 10%. 3-day chart, cleanest structure of the bunch, weak close, then a close below zero, then another, and down with conviction. There's current support at minus 35%. It could slow the move, maybe even try to push price back up, but if we break through and lock below it, we're in the minus 35 to minus 70 range. Those are February levels, so if that support doesn't hold, we go all the way back to February. Daily chart confirms. Close below zero, selling dominant, held cleanly since mid-May. Now it's breaking completely, and the daily points to the same February levels. Its local support is already gone. 12 hours, every local support since February is broken. Very deliberate move down. It confirms what we read off the 3-day chart. Broke the support that held since February, and now we're heading for the lowest point. And on the 4-hour, 2-hour, even the 1-hour charts, same picture. Pinned to the floor, trend dominance weak, full cascade top to bottom. Now Bitcoin. On the weekly chart, that weak close we've talked about more than once played out in full. Cascade structure, falling. We might hold briefly at current support, that's where it slowed just now, but break it and we go lower, probably toward minus 45%. 5-day chart, full cascade, everything lines up. There's local support, a reaction off it is possible. Temporary or permanent, we don't know. But if we break down and lock below it, we drop to February levels, all the way to minus 47%. 3-day chart, same picture. Small local support, break it, we go down. Daily chart, totally deliberate move down, pushing through hard, also aiming for February levels. 12 hours has lagged a bit. Local supports here are broken, only the February ones left. Now the 4-hour chart, and here it gets interesting. Structures at the bottom, falling, but the readings are held on a strong stretch away from the moving average, far from it. See that empty space up to the moving average? Price is held far away, so the average gets dragged lower by inertia. That's what market maker price control looks like. The 2-hour chart is jerkier. It moves back, then back to trend. Compared to the 4-hour chart, it works like a jacket, pumping one way, then the other. That's how the market maker steers the chart where he wants it. What to do with all this? Setup for the week, we trade the whole market. Trends strong and confident, we don't fight the tape. Trade the group orders short, don't argue with the market. We still check Bitcoin just to know whether the structure matches or not. If the sync between market and Bitcoin starts to split, that lets you spot a trend change earlier. For now, both are heading down together. Entry points. As long as the market's daily and 12-hour charts are in falling structure, on the 4-hour and 2-hour charts, we look for bounces or quick runs up to the zero line. But in this position, we usually don't break the zero line on the first tree. So those are great spots to take a short on the impulse back down. That way you're not playing with the crowd, the ones who believe in the bounce in the bottom and pile into longs. You're playing with the big player. You take the short when he finishes his run for liquidity and turns the chart back to the main trend. If you're bolder, you can start building from the minus 3% zone before it runs off to print new structure. If we do start recovering, getting out of this downtrend with the current picture won't be easy or fast. It'll take getting the 2-hour and 4-hour charts back above zero and holding dominance over the line, not letting price drop. And in the current structure, breaking the zero line on the first attempt will be tough, so we watch the direction of the higher time frames and trade the mid ones. If it's unclear, we drop all the way to the minute charts to read the situation. As long as direction is there, we don't guess. We join it. That's all my observations. Platforms in the description. Indicators available to anyone. Free. Thanks for being here, and see you next Friday.